time exclusive. Come on, is it worth it? Let me work it. I put my thing down, flip it and reverse it.
This is not financial advice, nor is it a music video channel, but that song kind of resonates with what short selling is. If you put work on it, short selling can be worth it. And for the most part, it is about flip it and reverse it. For the most part. Hello and welcome back to Rogue Sector. So tara, let's get to it. The Securities Borrowing and Lending Framework in 2023 paved the way for the advent of short selling in the PSE. It is important to understand that the SBL framework was not approved to make short selling possible. This framework was adopted to facilitate borrowing and lending of different kinds of securities, such as bonds, stocks, commodity-linked securities for institutional players. Short selling is just a small part of this. Allow me to present short selling using a concept that is modern, simple, and close to how a retail trader would experience the process. Now, let's say a trader opened a short sell position for a shady company at 10 a.m. at 900 pesos, so he opened his trading app to submit the order. The app will check its database if the stock is clear for shorting, meaning if they have clients holding shady company stocks and that shady securities is included in the eligible list. This is the list of securities that traders can short. The PSE updates this list daily. Let's assume that there were 3 stocks available for shorting. This trader shorted 1 stock. Now, normally, a trader must have cash balance in their trading app equivalent to 150% of their total short sell order. This cash serves as collateral, but in this example, let's assume that no collateral was needed. When the app triggers the order, it simultaneously borrows and sells 1 stock of shady company at the current price of 900 pesos. The app will tag the borrowed stock as shorted, which means it will no longer be loaned to others who may wish to short shady company until it was returned. Now, the trader doesn't really get to hold this borrowed stock. What happens is that he ended up getting its equivalent cash value deposited to his trading account. So now, he has borrowed, quote-unquote, 900 pesos. Let's assume that by 11 a.m., the stock of shady company went a steep decline to 500 pesos. The trader then made his move and issued a closed position through his app. Closing a short sell position means simultaneously buying the same stock and returning it to its owner. Since the price went from 900 to 500 pesos, he's left with 400 pesos gain in his trading account. The broker will tag the stock as returned, and other traders could now short it if they want to. This is also called sell high, buy low, the reverse of the traditional buy low, sell high strategy. By the way, if you are just starting out, you need to get used to these terminologies. I'm not going to go through them, so take a screenshot and review them later. Now, what happens if instead of a price drop, it actually went up? Let's simulate this with a twist. Suppose we have a different trader. So he opened a short sell position at 1 p.m. at 600 pesos. However, this guy has 300 pesos saved in his trading app. After his short order was submitted, he now has 900 pesos sitting in his trading app. So he waited, and by 2 p.m., the price went up from 600 to 700 pesos. Now, if this trend continues, the money in the trading app may not be enough to cover the losses. It is at this point that his broker may trigger a margin call, which can be one of the following. 1. Deposit additional cash. And 2. Close the short sell position. If he decides to increase the fund, a short sell position will remain open. But let's say in this case, he did not have additional fund. Then the broker will interfere and close the short sell position. In our example, it was closed at 3 p.m. at the price of 900 pesos. Obviously, the trade didn't go well. He was forced to buy the stock at a higher price and return it to its owner. And he also lost the 300 pesos he had. Short selling is not for everyone. This diagram is the daily information cycle of short selling reports amongst the brokers, PDTC, and PSE. This is how the short selling transactions are monitored. If this has been informative, please like the video and click on subscribe if you like similar contents. Speaking of which, this video talks about some of the most common questions about it. Thank you for spending your time with me here at Rogue Sector. Till then.